Bajaj in focus. Shiv Sehgal is with us, President and Head of Nuvama Capital Markets. Shiv, good to have you with us here. Thanks for your time. We just want to start by talking about the budget, which is not very far away now, a few sessions away. That one likes it or not. I mean, every year there is chatter about taxation, especially on stocks, which comes through. So I want to just ask you whether that is the big risk really for markets, because I mean, everything is done very, very well, and now you've got to perhaps also start to think about what could cause a bit of a pullback, and is taxation perhaps the number one reason which could do it if it were to come about?
Firstly, thanks, Prashant, for having me on the show and inviting me. It's always good to have a chat with you guys. I think, I can't even recollect the number of years we've been talked about before the budget, or the interim budget in this case, when taxation has become chatter buzz. To be honest, I think, yes, there is an element that, given that markets, the euphoria that has been created in the markets and the returns that we have seen in the last couple of years, there is a natural tendency for people to talk about the fact that there could be a change in the taxation regime, especially in the short-term capital gains tax. If you were to ask my opinion, I don't think it's on the cards. I think markets will continue to climb this wall of liquidity that we perceive in India. And, India, I've been quite publicly been calling this a great phenomena for India. And I remain a very strong bull in Indian markets. And I think we will continue to carry this uptrend into this second half of this year as well.
So what about the argument about valuations? How do the valuations stack up now, according to you, in the global context? And where is it that you find value now, Shiv?
So great question. I think, in every, I would say, corporate boardroom and investor chatter, valuations are talked about. I think there is no doubt, given the fact that, Indian markets are up 100% in the last 5 years, and even global markets, given the global liquidity post-COVID, has seen a tremendous return to investors globally in different asset classes as well. It is a natural tendency to talk about where valuations are, and yes, they remain stretched. But I think I would break it down into a few segments here, Reema. The reality is that everywhere you look at corporate earnings in India, we find ourselves in a sweet spot. And I think there is a large runway for us to continue to grow around that high teen, 15 to 20% CAGR for corporate India. And as long as that runway and return on equity is maintained, valuations and EPS will continue to remain high and lofty. We are nowhere close to, in terms of the peak that Indian markets have seen in previous regimes, especially in 2007 and 2003 to 2008 bull market. And I think, as I said, this time around, we also find ourselves in a very sweet spot from an India context, that global growth is slowing down, and large asset allocators will find it difficult to deploy the kind of liquidity that India is now showing. Let's not forget that along with this market rally, we have gone from a 2.5 trillion market cap to 5.2 trillion today. And to give you some more anecdotes, I was looking at the number of companies that are more than $1 billion today compared to last 5 years. India had about 300 companies, which were more than $1 billion market cap in 2020. That number is almost doubled. We have 600 publicly listed companies today that have a market cap of more than $1 billion, which also means that we are continuing to deploy more liquidity. Of course, the major theme has been the domestic mutual funds continuing to grow. Even there, their number was less than $100 billion in equity, and now they're managing, in excess of 330 billion. So from every stat, whichever way we cut the cloth, I think the statistics are showing that India remains on a very strong trajectory.
Hi Shiv, good afternoon and good to see you in. You and your team, I believe, are very, very busy with all the fundraise as well that's taking place in the market, but those are individual stocks, so we'll keep that aside for the time being. How do you approach the consumption theme? Some part on the street believes that staples require now a bit of a look, but you're in the camp that's still bullish on discretionary consumption. Tell us more about that.
So I think, you're absolutely right. The one pain point, and I think at least in the investor and analyst community, the rural demand has been the weak spot in India lately. I think monsoon has been pretty robust and remain on track for a healthy season this time around. And I think, if you look at it in the context of what happened with elections, a lot of investors also attributed, the BJP's weaker than expected performance to rural stress. And I think that has raised expectations. You just asked me a question on budget. I think going into the budget, there is an expectation in the investor community that some targeted spending programs by the government to address some of these concerns are on the cards. As we all are aware, the government has been reducing revenue expenditure to support the infrastructure capex. And well, that is in a longer term trend, a very welcome boon. I think it is possible that the needle swung a bit to the extreme. And I think some restoration of that balance is needed. And we are kind of seeing that in the rural and FMCG upturn. Our expectations are that, you will see growth improve by about 8 to 10% in this corporate earnings, which have just started. And, already companies are indicating about 3 to 4% growth from the previous quarter already. And market is kind of anticipating that rotation as well.
Yeah, no, absolutely. And, we'll see what happens. We, by the way, Shiv had a couple of infrastructure experts in the morning from CRISIL, and we had Vinayak Chatterjee as well. And, Vinayak made some points saying that on infra itself, he expects a big, as compared to the interim budget, where the central government sort of budgeted number was about a little over 11 lakh crores. He expects the number in the final budget to be upwards of 13 lakh crores, 13.5 odd lakh crores or so. So significantly higher is what he expects the proper full budget to be. So I think, consumption, yes, but I think infra as well remains pretty much a focus area. You'd agree?
100%. So if you look at infrastructure investments, I think, the estimation that we have is that it will total about a 1.5 trillion over the next 5 years. And I'm talking about dollars here at a CAGR of almost like 15-16%, right? And that will continue. We have already seen the infra theme play well out in the last 2-3 years. And I think we are at the cusp of a very long-term trend and runway here and India needs it, right? It's not that it is just an investor story. It is also the fact that it is laying the foundations for a much larger runway for the logistical, runway for India and the infrastructure that India needs. As we are becoming a much larger attention seeker and driving global economic growth today, right? If you look at even this week's numbers, what China reported versus what India is reporting, we continue to remain a market darling, not only just an EM perspective, which we were, but now I think in the next couple of years, and the government has also talked about this a lot, the runway for the next 25, 27 years, the India 2047 theme, and the goals and the aspirations that both the government and the private sector have, I think a lot of that will be led by infra and the derivatives of infra, which also means real estate, logistics, supply chains, the road infrastructure and the water supply chain and infrastructure as well. So that's a theme that we are very bullish on, and we continue to remain quite robust on that.
As a house call, you believe IT has bottomed out, right?
Absolutely.
Okay.
I think
not everyone's convinced. They think that it's going to happen, but maybe 6 months down the line, 9 months down the line. But according to you, it's already happened.
So I think, the sector rotation is on. TCS reported some decent numbers. And the way I look at it, Reema, is that valuations are now for the IT sector about a 25% down from the peak. We are now at a 5-year average versus during COVID. If you looked at, the first year, we saw, a bit of a, overbought situation, which has now corrected in the last 12 months. The sector, to me, seems in the investor community is slightly under-owned. And we feel that the IT sector is bottoming out, as indicated by an uptick in the hiring numbers as well. And, a lot of that is also driven by the GCCs and the kind of growth that we are seeing in India. And let's not forget, we keep talking about the demand demographics and the upskilling that is happening. And I think there is a shift here where global GCCs are coming to India, and that will drive a lot of this demand for the IT sector as well.
Okay, all right. Shiv, appreciate you stopping by and giving us your take on the markets as well as on the individual sectors. Too bad we can't discuss stocks, otherwise it would have been a little bit more exciting as well. Thanks a lot for joining in. Well, I think we need to take that short